Everyone, welcome back. This is This Week in Coverager. This is the podcast where we talk about topics during the week that occurred that were interesting in insurance, finance, fintech, insurtech, whatever else is just interesting. I am Nick Lamparelli. I'm in podcasting headquarters in Naples, Florida. In Coverager headquarters in Queens, in Brooklyn, I have Avi, my co-host Avi, and Shefi. Hello.
Hello.
Hi there. And we have a guest, another guest this week, a man that many of you will already know. His reputation precedes him, Trent Cooksley from Cowbell Cyber. Welcome to This Week in Coverager.
Thank you, everyone. I'm really excited to be here.
I call you the Bill Burr of insurance.
It's not very creative, but
but I think it's quite a compliment, though.
It's spot on.
Yes. You're a handsome guy, so just accept it. And so we're going to expect some chuckles, a lot of pressure on you. So before I go over to Avi for the first topic of the week, Trent, why don't you introduce yourself for those where your reputation hasn't preceded you?
All right. Well, thanks, you guys. I was really excited to get the chance to come talk to you. I'll give you a little background. So I started my career as a bond trader at Chicago Board of Trade, and I quickly realized that that's as much of an athletic competition as it is like a quantitative one. So I went and did some desk trading, oil and gas. During that time, I got my graduate degree and started and failed a few different businesses. And then I found this young company that was focused on workers' compensation, and I didn't know what workers' compensation was at the time, but the company definitely had something going on. It was very early stage, taking advantage of the internet, really focusing on data and analytics. And I started with them, and that's really where I kind of cut my teeth on the crossroads of insurance, innovation, and technology. And we were an MGA. We were also an insurance company, depending on the jurisdiction. So there was a lot going on there. We grew that company pretty fast, and we sold it in 2010 to Markel. And then I spent 9 years with Markel in a variety of different roles, with really the last half of that helping start up the Strategic Partners Group, Markel Digital, Markel InsurTech Underwriters, Markel Digital Investments. So a lot of exciting things with a great organization there. And then in the summer of 2019, it was time for something different, and I helped co-found Cowbell. And so I've been focused on Cowbell Cyber and a couple of different advisory roles for the last 18 months.
You started off as a bond trader. I didn't know that.
Is that when you lost your hair?
Yeah, it took me. Yeah, it was about 2 weeks. So I mean, I started off sneaking McDonald's hamburgers onto the floor for the other traders, but I got to have a lot of conversations with Rick Santelli.
That must have been.
I was not cut out for that line of work.
Yeah, that must have been something. That's very interesting. So you learn something new every day. So that explains a lot. So why don't thank you for that. Why don't we kick it over to Avi for the first topic, and no holds barred, Trent. Just whatever goes.
All right.
So there was actually a lot of kind of interesting stories this week. One, a soft one, Hippo investing in Luko alongside other investors. Luko is kind of the French Lemonade. They copied Lemonade. They launched in France. Now Lemonade is live in France just this week. So I thought that was interesting. And I they have like a smart home play, but you got to wonder what the incentive behind that was in terms of investment. There was, of course, and we'll go over these very quickly, USAA and Metromile. That's a story. It's a true story. So, believe it. We'll move on from that as well. And,
wait, you have to explain that one in case somebody didn't read it.
So read it. It's a Coverager exclusive. USAA and Metromile were engaged in acquisition talks earlier this year. And, well, it's interesting first because, to me, the big part of the story is Metromile's valuation at the time of the acquisition talks, which was significantly lower than their valuation now with the SPAC deal. And, it's I mean, I think it's like you look at the USAA, their telematics unit, not something amazing, but they looked at Metromile, from my understanding, more of a technology play, which begs the question: did you do your due diligence, USAA? Did you do your due diligence when you look at Metromile as a technology company? I'm not sure about that. It didn't go through for different reasons, but Metromile is on their way going public, so we'll see how that plays out. We're seeing Lemonade stock go up high, Roots stock not doing so well. So you never know with these things. So that was the story. And I want to talk to you, Nick. Two interesting things happened. One, which to me is interesting for the action itself, Mass Mutual buying Bitcoins. And the second thing is an insurtech acquiring a technology company, which I always say, like, insurtechs, they take pride in their technology. They have engineers. They can build everything by themselves. Why did Next buy Juniper Labs?
Yeah. So the Bitcoin thing, I'm going to have to pass on that. I don't understand Bitcoins, but I would probably try to get Trent's feeling on that. But it was $100 million, wasn't it? Like, this wasn't just a little investment.
Well, it's little for them. I mean, they manage like 240 billion, so maybe it was just really little. But we've seen this happen in the last 3 months for some other corporates, not insurance. I was shocked that an insurance company did it, and I think it was very telling because Square bought $50 million worth of Bitcoin maybe 2 months ago. There's a company called MicroStrategy that actually put out a convertible note to raise $650 million at 0.75% interest that they're going to actually use to buy Bitcoin on top of the 500 million they've already purchased. But to see an insurance company, I think is a little surprising. But I anticipate this is a wave that is going to be occurring because 0% negative interest rates. People are looking for a safe haven. If you're sitting on cash, you're sitting on a piece of ice that's melting. So I'm surprised they didn't get more publicity, actually.
Does this give legitimacy to Bitcoin? More legitimacy?
I think it has it. I mean, you have
a conservative insurance company would dedicate this much to Bitcoin. To me, is kind of like the final piece of like, okay, this is a real asset.
It's been going on for 12 years. I think somebody said in a research paper last week that is 12 years. Do fads last 12 years?
I don't have Bitcoin. I don't understand it. Like I don't even know how to buy it.
You go to Coinbase. You could buy it on Coinbase.
But then I hear horror stories about people losing stuff and then it's gone.
I read about this Dutch family, like the most amazing, handsome man I've ever seen, and he travels the world because of Bitcoin. Like, he bought Bitcoin years ago. He sold all of it. He sold all his assets. He's, now he's traveling the world telling everybody about Bitcoin. But I heard another story about an insurance company in Israel that is now under a cyber attack. It's a kind of like a big company called Sherbit, and cyber criminals, they stole documents, credit cards, IDs, all that stuff of policyholders. They told them pay. I think like there was some 100 Bitcoins or something like that, or maybe more. And from my understanding, when I read the article, it said it was untraceable. So if you pay with Bitcoin, you don't know where it is. Like, you can't freeze the account. You can't do things like that. So, and the insurance company refused to pay because they said, we don't negotiate with terrorists or whatever. And they've exposed a lot of the policyholders' personal information. So that was another Bitcoin story of an insurance company this week.
So is that an underwriting question when you apply for cyber insurance?
A lot of buyers of cyber insurance are interested if their carrier has the ability to pay those ransomware claims in cryptocurrency for sure, because those are usually what the hackers are demanding. So I mean, ransomware has obviously exploded over the last year, and so there's a lot of interesting questions around that for sure.
Can we get the Mossad to find out who these people are? There's got to be a way.
Listen, it's interesting, really, the choice, of Bitcoin, and you mentioned, the increase in cyber attacks, and we're saying work from home. There's more. What's going on? Like, what are the people doing? That there's more risk. Is it because Internet Explorer? Is that the problem? Is it older people that this is happening to? I mean,
there's a surprisingly high number of people still using Internet Explorer.
I want to see the age demographic of like cyber attacks. I'm really interested in that. Like, I want to know if like the people that it's happening to them are a certain like age group, or maybe they're using a certain technology. I wonder,
So definitely using certain technologies. End-of-life technologies are just really nice targets for cyber criminals because they're not being supported anymore. So they're not being patched, they're not being updated. It's a surprisingly high number of organizations are using technology that's at the end of its life, and they have.
Oh, wow.
It's also a really expensive proposition to move over, right? I mean, you don't just go decide you want to do it and go buy a download and plug it in. So they're very challenging discussions happening in the boardroom on that. I haven't seen a specific demographic get attacked yet, but maybe I'll keep an eye out for it.
Well, you said end of life, and that got me thinking of the companies like Evercode that target older demographics to get a hold of their financials. And I was thinking, okay, it makes sense to target seniors. But then Avi always jokes. So everybody in my family makes fun of me because I still answer calls that I don't recognize.
It's embarrassing. It's embarrassing. It really is embarrassing.
Some of them are really convincing. I mean, once I did almost give my information, but I didn't. But
a surprisingly high number of people do, and of all demographics, right?
I don't even answer the phone if I recognize the name. It's like Trent Cooksley. Not right now. Let's see what he has to say. Or
if I change it to say spam risk, then you'll be like, yeah, maybe.
I think the whole Bitcoin thing is interesting because there's like Ethereum, like what would prevent someone from just creating a new token? Like, it almost seems like you can build this stuff from scratch. I just don't understand it.
So there's a lot of rabbit holes there, but maybe this, from an insurance standpoint, begs the question of, so if it's not a fad, blockchain as private blockchains kind of really, kind of crapped out, whatever, in 2018 and maybe in 2017 when people were really talking about them around insurance. But you bring up Ethereum, which is really interesting because Ethereum has just launched Ethereum 2.0, and you can build a lot on top of that. So maybe public blockchains are where people will find really big opportunities. So I don't know if you guys are familiar with like Nexus Mutual, but that's an insurance organization built on Ethereum. Really very interesting what Hugh Carp is doing over there, and there's a lot of open source around it, and I think you'll start to see stuff getting built on top of Ethereum that will have insurance implications that will bring blockchain back around. And I think it won't be private blockchains; it'll be the public ones built on protocols.
I do believe in the blockchain. Like, I do believe in that technology. It's the money element that's associated with it that's just a head scratcher.
Yeah, I mean, I don't understand any of it. I don't. I really try to understand. Like, I try to learn, but I don't get it. And not that I was ever into like stocks or finance or things like that. Ask me anything about hummus, shawarma, not a problem. Things like that, and I know many others struggle to understand, and that's why they're not investing. But it's really, really interesting because you have so many people really devoted, like they swear by it, and
they do.
yeah, it's crazy. Yeah. It's just amazing.
At first, it was like the preppers. So, the end of world types, the government's coming after me, and it's a good place to hide and hide the money. And, and there's a lot of that, like, because you can't trace it. And then you have a company like Mass Mutual. It's like, oh, we're going to buy 100 million worth. It's like, well, aren't people going to like line up in front of you, or how does that get reported? What's the NAIC implications of, I don't know.
But if we're talking about this for 12 years, are we going to talk about this for another 12 years and still be in the same position? Because you visit Nexus Mutual and the first thing you see is still a white paper. And I remember I was like once making a joke around 2016, every blockchain based insurance startup, that's what it was. It was, okay, go read my white paper to understand what I'm trying to do. So I think the technology, obviously.
Nexus Mutual is providing cover on smart contracts today. So that's not a pilot anymore. It's in progress. So I think it's very interesting what's happening there. So it's basically providing cover on multi-sig smart contracts. So if there was a hack, you could actually get whatever you had lost in that hack back. And then the token itself is, it has a kind of a governance protocol to it. So you can, be an owner of it and be part of that governance protocol. And it's really getting rid of a middleman, which is, fairly interesting, and it's putting things onto a smart contract. And so these are moving really, really quickly. I was talking to somebody who is, deep in old finance, old insurance, and they're now deep into Bitcoin. But the specific reason was they met people who are working on it, and they're like, these people are really, really sharp, right? And they're really able to move really quickly. So it's pretty interesting that an insurance company bought Bitcoin.
I believe that. I think a lot of the mathematics behind it are fairly complex, so they are very sharp. I believe in the technology. I think for transactions and audits and things like that, that's something that my company's doing, is to put the entire underwriting process, so the MGA guidelines, into a blockchain, because then that can get shared with our stakeholders, whether it's a reinsurer or a carrier, and they can see that, like, we literally followed the guidelines, like it's embedded in our code and it was placed into the blockchain. So they don't have to come and do an audit, either on site or virtually, to check our files. It's all right there in the blockchain.
Most interesting case was the one with kind of the death database, where you monitor people that have passed away in order to initiate the life insurance process, which is helpful to the family members.
Was that in Asia, right?
That's really,
yeah.
There's one in the US, so there's one in Asia, so obviously relevant.
The only, but speaking of 2016, Shefi, the only term that Lemonade didn't use when they came live was blockchain.
Blockchain?
I think they used everything else: AI, behavioral economics, stock.
There was a blockchain competitor to Lemonade that used blockchain, and in the fine print, it was very much along the lines, because guys, peer-to-peer was always associated with blockchain. Remember back in the days when people started to use the blockchain technology, and it was all about sharing information. That company, which is, again, it was a white paper and ended up as a white paper, had a fine print that said, by the way, we're not Lemonade.
Interesting.
So that's 2016. Oh, that was a good year.
Lemonade closed at 91.59 today. It was down 8%. It did break $100 a share for an all-time high, making the company worth $5 billion. So I wanted, I don't know if this would be excitable to the audience, but I was thinking of writing an article for Coverager and doing like a tale of two companies, and like basically give you the finances of two companies, growth rates and all of that, give you the name of two companies, and have like the audience figure out which company belongs to which. But I'm looking at a company like Unum, UNM, which is an employee benefits, life insurance, and things like that. Their market cap is the same as Lemonade's, right? and they have billions of dollars of revenue, nearly 5% dividend, and their book value. So they're at $23.27, and their book value is, where is it? It's like 100 billion, or they have 2 billion in cash, and their book value is $53 per share, and they're selling at 23. And then there's Lemonade, and they're worth exactly the same. It's Trent, you were on the Chicago Board of Trade. Talk about the animal spirits that go along with something like that.
Well, I was there a long time ago, but I mean, this mantra is across a lot of industries right now. It's money's going to growth, right? If you're an electric car company, you can trade at 1,000 times earnings. If you're an old school car company, you trade at 15 times earnings. So I don't think it's actually insurance specific. I think it's kind of a macro trend. And maybe along the same lines with Mass Mutual going, well, we better buy Bitcoin because I don't want all this cash. We're printing money like it's going out of style. We're going to continue to do that, no matter who's in office. That's a given. And the dollars are going to growth. So anything that has digital or technology on it in any industry is getting valuations right now, right?
Well, that segues back to Avi's story on USAA and Metromile, right? So
I wonder if that was more of a cultural thing.
Well, I'm thinking that too, but also what you just said, Metromile's valuation is a lot higher in the SPAC than it was where USAA was thinking of, and maybe that was the deal breaker for that. But it's just like there's almost like this incentive. Like, if I were in insurtech, I would do absolutely right now anything possible to try to accelerate towards an IPO. Because I think you're right. I don't think it's an insurance thing. I think people are just hungry for fast-growing, tech-ish companies that are going to IPO.
But the difference is that this happened with Amazon and Sears a long time ago, where people were saying, "How is a bookstore, online bookstore, worth so much more than the revenue?" And people said, "This is the future." That was the thing. This is the future. That's why it's worth more. Tesla, you could say, is the future. They've built something that's different. Lemonade, Metromile, Root, it's the exact same insurance. Having a chatbot, using a third party to build a chatbot, is not the future. Everybody can have that. It's the exact same thing. And yes, you'll go for an IPO, and some people will buy in, and you'll make your money. But this is not Amazon that leveraged the whole concept of, the convenience economy. People don't want to leave their house, order everything. They were very aggressive. What could Lemonade do? What could they do? Unless they go beyond insurance.
Look at what they're doing. Even with life insurance, it's not going to be their paper. It's going to be in partnership with someone else.
Look at what they're doing.
So that's the question. What's going to come after life insurance? It's going to be car insurance?
Hippo invested in Luko. Right. And I don't know, Trent, it just seems like just grow, make investments, move quickly.
Well, Hippo's got a lot of money right now.
I know.
From 2020 was a pad the pockets year for them. So I don't know if that's the same type of investment of Next and Juniper. Similar, maybe not at the same scale, but similar type. Capability. I don't know anything about Hippo. I don't know anything about Luko, but is it a capability? I mean, you're not buying revenue, right?
No, it's a smart home insurance. Sending water detectors and stuff like that. They have the give back model, the exact same like Lemonade, just for France. MGA, they're not an insurer. They were now when Lemonade goes to France, people are going to say, well, do we stick with the French, or do we go with the Americans or Israelis or whatever you call them? So I bet that most people will stick with the French just because. And we saw that in Germany as well. Lemonade, they can get people excited here.
These markets are really different. I mean, GetSafe was in the news this week, right? Raising 30 million. And I think they were mostly in the news because it was an investment by iptiQ. And I think last year they didn't make any investment. So big deal on behalf of Swiss Re showing support on GetSafe, which is basically currently applying to be a P&C insurer. So there's definitely this trend where we start as an MGA and we want to be a full stack insurance company. But then on the other side, they're partnering with an insurance aggregator. You go in, and if you know something about the audience cares about the price. And so there's always that, we're going back to the basics. So there's dilemma, who's the customer? Because with Amazon, what kind of customer did they have? If we're comparing it to Amazon or to Tesla, again, with Lemonade, what are we comparing it to? What's the benefit? Who's paying a premium for insurance? It's always going to be that kind of a question. With Hippo, it's interesting because with homeowners, maybe less sensitivity to price, they're moving into teleconsultation, so moving into services. Luko is doing the same thing in France, so trying to assist or going into the service area, which is another kind of trend that insurance companies are picking up on.
If you want to ask me, you want my opinion?
Always.
About the whole smart home. It's a way to scam insurance companies. That's what it is.
I would say the same thing about wellness, right? Because at the end of the day,
whoever,
if we care about smart home, we care about smart home. If we care about how many steps we take a day, we care about how many steps we take a day.
It's a story.
Somebody's trying to say, an insurance company pay for it.
That's my opinion in most cases, because it still can't get your roof to stay when there's a hurricane. And really the flood, everybody's saying, oh, well, how much people, they have flood in their house, they forget whatever. I think, for Hippo, it's a story. And we're seeing this, by the way, with Root. One of the reasons their stock is performing so bad is it really is a story. And their story stinks compared to Lemonade.
I agree. I like the smart home thing.
Oh yeah, no, it's different opinions and perspectives. I think that because it's not proven, like with telematics, you could at least say that people who drive fast or hard brake, you could show it. You could show, telematics, you have a lot of data. With smart home, what is that detector is going to, is it really going to prevent anything? Maybe not.
Not necessarily a detector. I'll say like a smart device for water shut off, right? Is one thing where in homeowners insurance, water is a much bigger loss cost driver than fire. So I see an opportunity there where it could reduce the loss costs. And so that's always a good thing. How the insurance figures it out in the business model, I have no idea yet. I like the way Hippo's doing it because they're not counting on it. And it's a story. So it's a marketing. It's a, as they say.
That's the thing.
Point.
To me, it's a weaker story. Like if I had to rate the stories, it's the weak story because Hippo is still sold through agents. No one is coming to Hippo because of the smart home insurance.
Sure.
Customer is not coming for that's the thing. Yeah.
Listen, you brought up Tesla and Amazon. Trent, if those are like two world-class companies who have dramatically changed the landscape in their respective industries. Lemonade has not done that. Hippo, I think Hippo has an opportunity, but they have not done that yet. It's hard to do.
I think the best insurance is invisible insurance.
Exactly.
Right?
Amen.
That you never have to really think about or know about. And so I'm surprised when people say they're excited, and there are different generational ideas.
I'm delighted.
I'm surprised when people say they're excited. Like I've had good experiences with insurance. But here's my good experience. The last time I bought a car, I took a picture of the whatever the slip with the VIN number, and I emailed it to my agent, and I said, "Hey, I got a new car." And then like 3 days later, I got a bill in the mail. And I actually was gonna, because it being in insurance, I'm like, well, I got to try this company and try that company, but I'm like, they're bundled with this big company over here, and I never had any problems with them. And I'm not a shopper, so I'm not looking at it every year. And by the way, if you look at retention rates, most people maybe auto is a little different, but in about everything else, and I spend most of my time in commercial insurance. Commercial insurance is fairly sticky, right?
Oh, yeah.
Like, I mean, to get business, you got to take it from someone else. And there's one thing that, before we got on, Shefi and I were talking about when we first met in like 2015, and kind of at the birth of insurtech, right? And at the birth of insurtech, if that was 2016 or whenever it was, have we really had a hard market in insurance? We're awash in capital. So no insurtech has really had to face like really difficult scenarios where reinsurers are like, nope, right? Because now when reinsurers are like, nope, guess what? Someone else is kind of willing to step up and you're kind of willing to find it. The people aren't leaving the primary side. That may be changing, right? And that's a risk that a lot of, if you've only been in insurance for the last 4 or 5 years, you haven't lived in. If I go back to like work comp, from like 1980 to 2015, basically combined ratios, the whole market, work comp's a huge market, right? It's like $70 billion, whatever. It would go up to 120% combined ratio. And then 5 years later, it would come down and it would touch 99, right? 1985, it would touch 99 and then it would go back up, right? And it would go back up to 120. And then in 1995, it would come back down. It would touch 99 again, right? And I'm not kidding. This is like clockwork, right? 2005, it touched 99. 2015, it touched 99 again. Well, guess what? It kept coming down in 2015. It's the first time it is on its way down where you have 0% interest rates. That maybe changes within work, right? And the risk characteristics of workers' comp has changed, and there's probably less risky work than there was 30 years ago, whatever. But that dynamic has continued to come down, right? Like where now you got combines in the 80s. And by the way, if you haven't been able to make money in work comp in the last 5 years, you have no idea what you're doing, right? But what happens when we're running, you have a really big, a Katrina type disaster, right? Maybe this pandemic is it, right? Because we're still in the middle of it, right? Where, 6 months from now, if you're looking at, okay, now you're on a year of double digit rate increases on property or, whatever. I think that's a big risk that we haven't really seen in this.
I happened to think of that as I was going for a walk this afternoon, thinking about this particular conversation, and thinking about these insurtechs, right? Especially the ones that are really adamant that we got to get market share, so we're going to try to grow faster than our losses. And you're right, capacity has always been there for them, where the Lemonades of the world just passing their losses on to their reinsurers. If that stops, they don't have the balance sheet to be able to do the things that they want to do. They are completely dependent on having reinsurance there to keep them afloat. The reinsurance market gets hard for them. That's kind of disastrous. And I don't think a lot of investors, the ones that fund these IPOs with the Lemonades, the Roots, these companies that are coming out, I don't think they've put that into their calculus at all. And I've brought it up several times, and I always feel like it gets brushed aside. I'm almost scratch my head like, am I missing something here? Like Lemonade is completely dependent upon reinsurance, more so now than when they first started. They had to transition over to a quota share. I don't see that ending because of this give back. Like they show no signs that they want to grow their surplus and kind of take more control over that. Yeah. What if there was a hard market? This thing would end like that. So if I were these insurtech companies, I would try to IPO as quickly as possible.
So what products are we seeing the hard market in? Because I would think alternative to rent, there's tons of Jetties of the world, Lease Lock, companies like that. They seem to be actually surviving this pandemic. I'm hearing some negativity around cyber insurance, reinsurance market afraid to jump in because of what is happening with the pandemic. What do you say about that?
Cyber's hardening.
It's hardening.
Yeah, cyber's hardening for sure. As Nick always, I think Nick, you've said it's impossible to underwrite cyber insurance, or maybe it's impossible to price it. It's actually one of the reasons why we're in the business, is to solve that particular issue, because the risk is expanding at an exponential pace, right? And you have to be able to underwrite a technology risk with technology. But if you look at historical loss ratios, there's a lot of companies that have done fairly well in cyber, we've had a rough year, and especially in terms of ransomware, and it was exceedingly worse because of the pandemic. And there were companies that were like didn't know what to do when they went to work from home, right? Where they were like, well, I literally had to go out and buy my whole company laptops, right? And we didn't have a structure of how we were able to handle that. So cyber's hardening, but I think across the board there's hardening happening. So that's kind of what I would be more concerned about for the insurtech space, is a mass hardening where you're not just throwing the baby out with the bathwater in specific lines of business, you're doing it across the board because you're actually seeing your capacity start to dry up, where that really hasn't happened
it's happening though. Like the thing is, like, you're right. It's bit by bit. So you've seen it in California. So property markets have like seized. It was caused by the wildfire, but the pandemic did not help. The general hardening of the property market did not help. And I'm hearing, how difficult it is. I keep getting asked for coverage in like Southern Florida, which is all of a sudden, we didn't even have a hurricane here, but the hurricanes that hit elsewhere have affected that's hardening as well. If you're correct with the cyber market, like that becomes an issue. If you start seeing it in like aviation and workers' comp and other areas, it will be a problem. It's like a bear market. There's nowhere to run, nowhere to hide. And if you don't have a book already, it's going to be impossible for you to get a book. But I don't think underwriting cyber is impossible, Trent. I think there are companies like yours that can do it. I just said it's hard. It's really hard. And I have always thought it was harder than to do with flood. But that was selfish because it's like, I want capacity too. Why is everyone giving it to cyber when they could give it to me?
So let me ask you, underwriting, no underwriting, how the heck do you sell cyber insurance?
Well, we sell through brokers and agents. So
do you think you can do it direct to consumer?
I think you can do it on the micro level, direct to consumer. So my opinion has been on direct for commercial, and I don't think I've ever moved off of this, is that absolutely can be done. There's absolutely a market there. But once you start getting of any size, it's easier to have an agent if you're a business owner. I always said, like, there's this puzzle of risk that an organization has, right? And let's break it down to, a restaurant. You've got your property risk, you've got a liability risk, now you've got a cyber risk, you've got a workers' compensation risk. Me as an insurance company, I don't want all that. I'm a property expert. I want the property, right? Or I'm a comp expert. I want the comp, but I don't want the liability on it. I don't understand it, whatever the reasons are. So kind of putting that puzzle together that's a real fixing a problem for somebody. So the other thing is, if you're a carrier that's going direct, you better have a pretty broad appetite, or you're telling people no. Right? Like if you're an aggregator, you can place it somewhere else. You've got other folks. That's a little bit of a different story. You can have success going direct, but I would say, like, everybody who has come out of the gates commercially minded, has skin in the game from some sort of risk standpoint, has some sort of skin in the game, pretty much at about the 2-year mark, start moving into agents. I think that's all you really need to know. And I support that. I support both models. I think they can both work. But if you have, I don't know, it just seems to me, if you have 10 employees, like, you're sitting around, are they Googling how much insurance you need? Or you're just calling somebody and being like, hey, can you take care of my insurance needs? And it gets taken care of. I think that's a huge value proposition. So, if people used to compare it to travel agents, sometimes planning a vacation is fun, right? Oh, yeah. Like, people like to do that, right? They're excited about it. Like, I don't know who gets excited about evaluating different insurance options.
Definitely not.
I think we should stop comparing insurance to anything. It's kind of, it really is. Even when, I was writing this article about the Uber of insurance and the Netflix of insurance, and there is no Netflix of insurance, and the Uber of insurance is Uber because they have a capacity or a really big balance sheet. Same thing I would say with Lyft. And
I think you're right. The puzzle of risk, I think, is always going to be a challenge. Capacity will become more of a challenge. And it makes it so it's hard to have a monopoly, right? Like to say the Netflix, and Netflix doesn't even have a monopoly anymore because people have caught up, right? And now it's basically you're going to have to rebundle because you're spending $10 on every single service there is, and now I'm spending $200 a month on cable again, basically. But with insurance, it's hard to have a monopoly because, again, if you wrote the whole risk in work comp today, yeah, you'd be making money. If you're doing it 10 years ago, you'd be getting your ass kicked, right?
And there is this element. And so first of all, there seems to be always a conversation about what do we do? And then there is very few conversations around what we don't do. And I think, that's the thing. Like, for me, CoverHound and, building cyberpolicy.com, that was such a waste of time because if they would have focused.
No, that's not true. That's not true. They sponsored the Golden State Warriors. And that was nice. You would see it on TV, and it's Golden State. They got tickets to the game. The employees, I think, were invited. So that was nice.
What? Okay. Point taken.
Ever been to a Warriors game when they were good?
I haven't. I live in New York, so no. But yeah, I mean, I wish I could go.
Yeah.
You got me. What was my point is you go off this track and then you try to make it work. I mean, we've seen, I think it was 2 weeks ago where we said in Coverager that Slice and AXA are no longer selling a standalone cyber policy. After we covered it, 24 hours later, they went and changed their messaging on their website saying, we're working on a new kind of cyber insurance. And I bet you that new kind of cyber insurance is maybe going to be something like what Cowbell has to offer or what Corvus. It's going to be the traditional product being sold or intermediated or yada, yada, yada. You're still trying to figure out how to underwrite it better, right? But why figure out how to communicate it and market it to a consumer that doesn't know what to do with it?
Sales and distribution is a contact sport. And so can you build some embedded products? Absolutely. And I think that's really exciting. And people who have done that, if you go back to Shefi, when you talked about APN ago, that's kind of an embedded product, right? Pay as you go, work comp, it's kind of embedded. And I was actually lucky enough to build some of the first pay as you go software in like 2009, and that just exploded, right? It was a match made in heaven for those two types of products. Probably the perfect example. There's other cases where I think that is absolutely a possibility, and those things will take off and explode. But even if you're directly trying to sell through the internet, it's just competitive as all get out, right? And it's expensive, and it's a lot of crap in, crap out. Can it be done, Avi? Yeah, it can be done.
Well, if you want to lose money, yeah, you could do it. If you have a lot of money to lose, not a problem. And Allstate today, it's in the email. I think it's a big story, very big story. They have launched a part-time insurance agent program, and not Allstate employees. So I assume 1099. Sell insurance whenever you want. And this is an idea. I don't know if you remember, if you pay attention to coverage, but this was a concept that we talked about a while. We've actually improved the concept significantly. But, you said contact sport, right? That sales. Well, if you're ugly, no one wants to be next to you. No one wants to play with you if you're ugly, okay? No one will choose you. And to me, the idea of like part-time, and this was the idea of insurance for decades, bring the former athletes, the respected people in the community, the ones that go to the soccer, the church, all of that. Now Allstate will try to do something that Primerica has done very aggressively, but to really, expand their distribution channel. So they went from the captive, they bought National General, which is independent, and now they're going part-time. So a huge transformation in a short period of time.
Gig work? Is this like selling insurance as a gig?
Yeah. And they mentioned the gig economy, and I could tell you, here's what I think if you're a new agent coming to the workforce and you're just starting out and you have nothing, it's going to be very difficult for you to sell. anything. Like you need a network,
Yeah.
you need to find people. It's going to be very difficult. And
That
the
just-
question
We
is,
opened it up. We talked about Mass Mutual and then them buying Bitcoin and just the other. We spend an awful lot of time on Glassdoor. It's just part of the tracking that we do on companies. And till this day, every 10 Glassdoor reviews or so, you're going to find a financial advisor that says we are brought in to spam our friends and family.
yeah,
And if you have a rich family, that's great. You may be able to sell them some products. And if you don't, you don't. And that's the thing. Now, I answer the phone. A lot of people don't answer the phone. So it's a matter of
a lot of
how
people
do you
not getting
wanna go?
married. We talked about it. The young people that coming out of a college, a 21-year-old, 22-year-old, he probably never had a girlfriend. This Gen Z, right? I mean, it's all virtual nowadays, all tokens and Bitcoins and no face-to-face. I
Yeah.
saw actually, yeah, no, but that's the thing. Like you really, it's a process that worked for them for many years, and they keep on doing it because why not? It doesn't cost them anything.
So
Well-
it maybe like schlepping just a car insurance and auto and home for Allstate as a part-time gig agent. I guess I can see that.
People do it on real estate, Trent.
Yeah.
I mean,
Yeah,
I
no,
can't
absolutely.
even believe
think-
how many
I don't know about
friends I
commercial.
have
I don't know about commercial.
that do real estate now, right?
I
So
can't see it happening. Maybe commercial on the micro side, but even then,
Yeah.
then you're going to go to Hiscox and get their GL. But you know what, Trent? There is this illusion that with commercial insurance, there is actually comparison and apples
No,
to apples, and you
not
can
at
offer
all.
products. Meanwhile, like this is just one example, but we come in and okay, coverager, here are 2 options for you.
And
Oh,
very
what happened to
different
the
ones.
other 5?
Yeah.
So it's not, there is a reason why there's no monopoly back to the point. Everybody wants a certain kind of risk. Appetite is very different. You get into eligibility. The devil is in the details. A lot of folks coming in and saying, we're going to build an aggregator for small business insurance. And I said, okay, good luck. What's that going to look like? And then you need the agent, and you need to
It's
be
too-
reliant on them to
Even
tell
on the
you what to do.
aggregator side, like, so I wanted to get product through, specifically, I wanted to get product that was going through one channel. I wanted to get it on another channel, and I had built the technical capabilities to do it, but I didn't have the marketing capabilities. And I wasn't going to try and build that, right? So it was all about finding partners that I could do it with. And the one thing that always, like, after 50 meetings or whatever, that I was walked away going was like, if someone tells me, oh yeah, our technology is like going to be able to like fit the right insurance price, because every carrier comes in and they're like, well, don't spreadsheet me. I don't want to just be like I don't want to just be spreadsheeted to be the cheapest price. And I'm like, yeah, well, guess what? People want to look at price. But like, so we hear like these engines are gonna put the right carrier with the right product. It was almost always BS. Right? It never actually happened, because when you got into the real world, it was actually about, well, I need to sell, and I need to sell now. So like that idea of like matchmaking, Match.com for carriers and customers became. I'm not sure, and I'm not saying that it doesn't exist or that someone hasn't solved it. I didn't see it a lot in reality.
yeah. I kind of want to end on the story, the M-Broker story that I was reading in Coverager, because I thought that was interesting. So here's a digital broker. You don't hear a lot about M-Broker, and now they're opening up their entire platform. And I saw someone mention 2 agents, right?
I think but it was like when did CoverWallet do CoverWallet for agents? How long ago was that?
2 years, maybe.
2 years.
A bit.
And you know what the problem is, Nick, with selling commercial insurance online, aside from generating that awareness, because not everybody knows that you need. We went for like, I think 3 years without media coverage. Shefi bought some general liability, thought it would solve all the problems, and I said, wait a second, we've been getting all these like hate emails from people. I said, what if someone's going to sue us? Are we covered? And then we learned that we needed media coverage, and it took us a while to get it, and CoverWallet helped us. Thank you very much. We're coming up for renewal, and I hope we don't see a big rate increase. But, the awareness aspect is very big.
Let me just hold on. That's not a fully accurate story, because I went through Hiscox, and when I realized that I wasn't fully covered enough is after having a conversation with somebody that just didn't really have attention. She didn't want to pay attention to my kind of risk, and I started like networking around the folks that I knew within the coverager community. So it is a challenge to actually understand what kind of coverage you need. It wasn't obvious that, because coverager, we do a lot of things, and then you have to find a class code that has the wrong classification, for instance, put under coverager. All these things happened, and so it really wasn't easy.
Was that a conversation with someone at Hiscox, or was it a conversation with someone?
They're a customer rep, yeah.
So you call them, right?
I called them. Yeah, I wanted to make sure that I have coverage.
That's the problem with commercial insurance.
The phone calls are driven by the customers. They're not driven by someone going, I want to set up and can you? Yeah. Doing
It just imagine that you're paying. It's crazy. Like you're paying for something, and this is not like I pay $7 a month. I forgot to cancel something. You're paying a lot of money for something that you don't know. It's just amazing.
I know.
And again, we're a small company. Coverager is a small company. We're not talking about huge enterprises or things like that.
Yeah.
It should be simpler, should be more transparent. And this is the problem of MBroker and also CoverWallet.
But you know what?
Education.
I went through Next. Next didn't want my coverage either. Right. So I just want to say, so yes, 2 thumbs up to CoverWallet. There was a lot of interaction with CoverWallet. It was all done offline, I would say. Was there any online element?
And we had to send cake. We had to send 2 cakes.
We did that because we were happy.
But yeah, listen, I mean,
I think that kind of hits it. That's where I think, so I had the same experience when I was at Insurance Nerds, where we got our media coverage and we had 3 people that were in insurance, and we were combing over that policy, and we were just like, I can't tell the difference. Like, what is the difference between this one and this one? And because the price was very different. And it's like, there's got to be a difference in here. We ended up finding it, but we had 3 insurance people who were just scratching their heads. The average commercial person does not want to spend that amount of time. And so there's an opportunity here for someone to niche specialize and say, I focus on media. I will get
the opportunity is to create a NAIC code. I don't know if it exists, but I was like, we're a newsletter for the digital age. Like we don't print. I kept on telling people we don't deal with paper.
But you know what, Nick?
E-newsletter.
Let me tell you something. I'll tell you what the problem is with MBroker. And MBroker, they have a nice brand, they have a nice name. They've been doing very well in terms of SEO. They've really invested in that. They appear organically, and we all know that helps when you appear organically for the consumer. You're going after agents that CoverWallet is going after, Next Insurance is going after, Hiscox is going after, everybody's going after them. Now, the problem is you give this to the agent, and the agent's like, great, what am I going to do? Who am I going to call today? It's not as easy. They should have, what they should have done, they should have went to Substack. If they wanted to go after media coverage, they should have formed an exclusive partnership with Substack and said, look, we have the commercial agents, give us all the information. That's what we need. We need the distribution.
Avi, you should have been the head of business development, because it's what Trent said. You want to appear invisible, right? Like Shefi, we talked about this last week, affinity marketing. Like, it's not going to go away. If you can embed your product where someone else can do some of the heavy lifting for you, like, it's just such a bonanza, because nobody wants to actually buy insurance. Like, you can't be delighted in it.
But I will give MBroker credit for, I think what they do is they're trying to fix the terminology. They're trying to make it more approachable to speak the language that we speak in. Again, they are working with legacy carriers, and just like AP Intego, you can only go as fast as the company that's giving you the product to sell. And so, by the way, Trent, which carriers do you work with on cyber?
For our product?
Mm-hmm.
So we're the underwriter, and we write on State National paper, and we also write on Benchmark Insurance Company, and we also write on Obsidian Insurance Company.
Never heard of
that third one.
That sounds futuristic, the name. That's what it sounds like. The second one, not Benchmark.
Cyber is futuristic.
Yeah. Obsidian. That sounds like from like a galaxy far, far away.
Look at Trent's background. That's very futuristic. Like, the water's green.
That's Norway, right? What is it? Iceland?
I don't know. I pay 99 cents.
I'd like to finish on the end broker thing, right? And just say, we're going to keep hitting this. Distribution's hard. Sales is hard. I did see someone who did say, an agent who said, with the options that are available, he could theoretically just focus on a couple of appointments, ditch the rest, and just use companies like mBroker and others to kind of fill in the gaps everywhere else to give them a broad market ability. I was like, that's not a bad idea.
Yeah, they have access to many carriers. Yeah, that's true.
Is the move to give an agent access? And I read the blurb this week. Or is it to offer them a SaaS platform?
No, I think it's both.
Both, yeah.
Both, yeah.
Which is, I think, really smart because there's a potential play for them to kind of continue to dig in. I just don't see any way around it. I think you have to use the agent and broker force that's out there as a legit sales force because they already have the relationships. Like it's a less expensive way for you to sell your product than you trying to do it on your own. My 2 cents.
And I think it's going to, so Trent remembers me from a conference, and I remember him because I called him for advice way back when I was working for CNA, trying to apply for a job where it was the responsibility. I don't care about the titles, but the responsibility was, how do we realign agents to work better or sell more CNA products? And one of the options was they had a lot of relationship with cluster agencies where you don't actually talk with the one that's actually selling, but the level above it. And we had this whole conversation, and I was kind of taking notes. But with the agency base selling through agents, it's not the same for each one. There is kind of you have to differentiate between who's a good seller and who's not. And there's so many factors between that. Yeah. So just because Next is going after agents or mBroker is going after agents, there's more to that strategy that they're going to learn because they actually, build a relationship with these agents. And the idea is, how do we move forward and how we grow that relationship. So there is stickiness to it. It's, obviously everybody's in a relationship business. It's actually a good thing to be in a relationship business during this pandemic. Answer the phone.
You got to nurture it.
What is happening really is agents are trending again. All of a sudden, like InsurTech came in to replace agents. They're saying no more agents. Now you're seeing everybody going after agents. Cover Wallet, mBroker, Allstate wants part-time agents. Everybody wants agents.
Yep. It's an inexpensive distribution force. You pay them when they actually succeed. Versus
win-win.
Versus an expense that's continuously coming out of your pocket, where you may not be able to get the ROI. At least your interests are aligned. When you get paid, they get paid. It's worked.
And I'll say it again. They especially on bigger commercial stuff, right? Like, hey, you need car insurance. You can call Geico. You want to be a renter. You can. I'm sure you're a young millennial. You're really following Lemonade because that's a really exciting stuff for you. So you can call those up. It's a little different, but if you have a risk that has any complexity to it whatsoever, a good broker is an ally. A good agent is an ally to get you the right type of coverage you have. And I think Avi, you've said it before. You actually talked to an agent at Geico, right? He probably tried to sell you homeowners or renters because I think Geico Insurance Agency is actually the biggest agent in the country. Right? Because they get every auto in the phone and try to sell them a traveler's homeowner's policy or whatever. So the complexity though, those are good agents really serve a really valuable purpose. If you think like cyber specifically, forms can be very different in cyber. I'd say it's one of the most complex and could be the most variable type of form. Work comp is like the opposite end. Everybody's form is exactly the same, right? And so there it's a different sell, but I just think there's a big value proposition that agents have to deliver to the customer.
I think you just now need to help agents, and it's not with technology. Don't come to agents and say, "Oh, here's better technology." All of a sudden, you're selling 100 policies a day.
Help them
Help them sell. That's what you need.
sell.
Put more marketing dollars instead of putting
Yes,
marketing dollars in
exactly.
give agents a budget. Help them. Do something, because people don't understand that Google is not your friend. Google is your enemy. YouTube is your enemy. Facebook is your enemy. All these companies, all these, embedded, we talk about fintechs, they have so much information. They're going to, if they want to be a broker tomorrow, they have all the data, the reach, they have everything. You need to pull money away from those companies and start giving. I don't care if you go back to flyers if you need to. Print out flyers if you need to. Postcards, whatever. People now want postcards. You have to take money away from Google, from Facebook, all these like affinity partnerships with Chime. Do you want to sell to a customer with a average income, medium income of $50,000 a year? Is that the customer you want that's going to change you every 6 months? Think about your customer and help agents, and know with these, dumb prizes. If you sell this, you'll get something. No, commit for a change. It doesn't always have to be win-win where you always win. It could be win-win and you could lose a little bit and still be a win-win eventually.
Priceless. That's what you get here this week in Coverager. So hard to end on a better note than that. Trent, thanks so much.
Thank you, guys. It's a win-win-win scenario.
Win-win-win. Everybody's going to win.
Yeah.
And sometimes you lose a little bit, but that's a win too. So
thank you for joining us.
Thank you. I really appreciated it.
Thanks, Trent. Out in Omaha?
In Omaha, yep.
Okay, so for Trent in Omaha, for Shefi and Avi in New York City, I am Nick. Thanks again. So have a great weekend, everyone, and have a great, happy next week. Bye, everyone.
See ya.
Bye.